Greek central bank chief saying the cash buffer and maintenance of the ECB waiver on Greek bonds as collateral are a desirable post-bailout. Greek central bank chief saying the remaining capital control after the bailout completion.
Good afternoon, everyone. Welcome, welcome. Hopefully everyone is able to have a pretty good trading morning, make it through some of the chop and slop and slow price action that we saw today, that's for sure. Man, it was it was a brutal one today in terms of speed of movement. Even in the stocks, you know, there were a couple movers. VTVT had some pretty decent movement, but, you know, outside of the occasional here or there was a lot of slop and chop today. Had to be on your patience, that's for sure. Before we jump on in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list to be notified every time one of these videos comes out. Along with that, in the email, we talk about a bunch of stuff that we can't talk about or don't have time to talk about in this live stream. That's going to be everything from stocks, options, crypto, you name it. It'll be inside of there, so make sure to sign up for that so you don't miss it. Along with that, click on the live Trading subscription and trial info, and from there you'll be able to register for a free 3-day trial in the room so you can hang out with us for a couple days and see what we're all about. It's a really good way to kind of sit down with us, see how we approach the market, see how we trade, ask questions, and just overall a really good thing to do to see how we do it. So make sure to sign up for that if you haven't done so already. Now, looking at the markets, man, oh man, oh man, the euro. I guess this is one of those that falls back. We had someone joking about it in the live stream earlier on how these words were going to come out of my mouth. Don't say I didn't warn you. The euro gave us a beautiful, just a gorgeous situation at 24.010. We were talking yesterday on how we've been seeing this very common pattern over and over, engulfing continuation reversal, that ECR type of candle formation. And it was happening directly on top of major support at 24.010. And we were looking at a faster time frame saying, you know, what we really want to see here is a lift up back. We were looking at it around this time here. And we were saying how we wanted to see some conviction, see a good buy move to the upside, prove that the buyers want it, and then look for the pullback to buy in at 24.010 on a retest and sure enough, there's your retest. So a beautiful pullback. It did happen at 5 in the morning. Whether or not you were around the trade that or not, I'm personally sleeping at 5 in the morning, but either way, it was a gorgeous bounce in that location, exactly what we were looking for. So really tough to be upset with the euro, given that it did, I mean, exactly what we wanted. You know, the big thing that we're dealing with right now in the euro is the fact that we're bouncing back and forth between support and resistance. 24,010, the obvious level of support, but of course we have resistance above it, 24,480, 475, depends on how you want to round. But we have that level at the 61.8 that has held the market down here, held it down here, and now it's trying to hold it down here. Arguably, it did for a good hour or so, but now they're coming back and challenging it. Now again, the 61.8, you know me, I'm not a big fan of one specific level of support or resistance. I need a lot of things to confirm that level. And if we look backward, we can see that, well, there's a lot of things that confirm that level. Lots of resistance, support, resistance, resistance, support, support, resistance. You get the idea, right? So it's not just one thing that's stacking up in that location, and it is trying to hold the market back. If that does start to give way, if they can start closing candles above that 24,480, I mean, not just one candle, right? We need a little more than that. 24,480, maybe, you know, 1 or 2 candles, 3 candles closing above that high, really showing that the buyers want to take it further. Then we're looking for that upside objective next to fill at 24,855, and that's the big level of resistance that the sellers put in when they slam the market lower. We also have the 786 just above that, which lines up with a lot of other levels of support and resistance as well. So a lot of things building at around that 855 to 955 area to give us kind of a zone of interest. No new levels of support or resistance to be added so far outside of the ones that are already there on the euro. It's pretty straightforward. I mean, it's been following along with all the same levels because it's been in a range. It hasn't moved outside of the range. It's not really that easy to add new levels when it's not breaking any of the other ones. So we'll give it a little bit of time here, but for now, the euro is looking pretty good for continuation to the upside if we can start, again, closing candles above that 24,475, 480 area. Looking over on the gold market, gold has been, I mean, it was really range bound. Yesterday we were talking about how as long as it's in this range, we're looking to keep trading it the same way. Buy low, sell high, stay out of the middle. And, well, we're finally breaking out to the highs, but not without a caveat, just like all the other breakouts. This does look very exhaustive. Now, an exhaustive blow-off like we have here, we see that quite frequently on a lot of markets, especially on gold because it does tend to be a little bit more volatile. But we had one over here where it was just this, you know, trending up nicely, and then this giant bar comes out of nowhere. That usually is a sign that we're probably going to see a little bit of a break. Put yourself in the shoes of the buyers who are in that, right? If you are holding, and all of a sudden you come in and it's this giant bull bar all the way up, you're thinking, hey, thanks for the gift, market, close the position and take the profit, right? So everybody starts taking profit and it causes this reversal back down. Now, a lot of times those reversals are more on profit taking and the buyers will begin picking it back up when it goes deeper. But that's kind of the situation that we're looking at right now. We have an exhaustive type blow off through the highs, and it looks like a lot of people are taking profit. Not a lot of traders are expecting this to go much further, and we can see that because of the congestion after that candle is formed. So what that tells us is that, well, hey, you know, we're probably going to see some profit taking, and if we see some profit taking, that's going to create a support level on the return back down to where that exhaustion kind of kicked off, where that big blow off really started flying through the highs. So that becomes a big area of interest to potentially look to, you know, find some support in. It's going to be around 1348.1. I know we already have a level of support at 46.6, but this adds, it's a little too far away from that other level at 46.6. It makes sense to increase that support by just a couple ticks, in this case about 20 ticks, to find that next level of support at 48.1. And that's if they can pull back, right? This might just be a big run up, a pause, and a continuation run. We do have resistance at 59.4, which looks like they are trying to hold. They missed it by just a little bit. But if we can get that return back down into the range, I would love to find some support at 48.1 for a continuation bounce back up again. That's about all we can do there. So we'll drop that down. Take a look at crude oil. Crude oil is showing some really good movement here through those highs. Yesterday we were talking about how we had an equidistant breakout to the downside, looking for an equidistant break up. And along with that, just expecting that buyers will be buying into this move, and obviously, given the rally up, expecting profit taking on the highs. So with all of that combined, we not only have the fact that we have profit taking on the highs, we have an equidistant blow off on the highs, we also have the channel high coming through there. Everything kind of stacking up on the same location, or at least round about the same location. creating a big level of resistance. Now, the breakout to the upside on the through that level of resistance did happen on inventories. So I don't necessarily blame anybody if you skip that one because, well, I don't know about you, but trading through the inventories is a little bit dangerous. I've had my fair share of danger trying to trade into the inventories, and I really don't want to relive those experiences. So it wouldn't hurt my feelings if anybody said, you know, hey, I didn't take that trade. I don't blame you. But we did break through that level of resistance, and we are creating a new level of support. Again, this is kind of the same situation we were just talking about on gold, where it's more of an exhaustive blow-off. We have that nice persistent trend working its way higher, working its way, and then bam, that huge slap to the upside gives us the concept that a lot of traders are probably going to be taking profit. Not to mention the three other things that we were talking about for resistance. I wouldn't be surprised at all to see a lot of profit taking on these highs, and that is what we have seen so far. Now, again, as with any exhaustion, when the market returns back down to the lows of that area, it becomes a big area of support. So that is what I'm looking for on that dip. It is a minor level of support. I'm not looking for a monstrous bounce for another $5 move to the upside by any means, but I am looking for at least some short-term bouncing at that 67.05. If we can start pushing back down to the lows, you know, we might have a rising level of support. It does kind of look like it lines up almost parallel with that other one, measuring from low to low and drawing it up as somewhat of a channel. It does fit. You know, it's hard to ignore. We could be looking at a lot more aggressive of a wedge bottom. Not as big a fan of that one. I'd rather wait to see if they want to respond to this shallower level of support instead. It does also kind of look like it would be a midline of the channel. It looks like a nice area. So we'll keep an eye on it if they want to pull back to that, you know, for a retest. And again, you know, always looking to try to combine things. If we can get a little bit of a heavier-handed pullback and we can get it somewhere inside here, that would give us not only horizontal support at 65.97, but also support at 66.24 and the rising level of support, all kind of coming in the same place. So I would prefer to see this pullback take a little bit longer so we can come down into that kind of hot spot zone there, but yeah, it might take a little while longer than we really want. We'll keep an eye on it. This on here so we can remember there, right there. So that's kind of what we're looking for on crude. Overall, likely that we're putting in a near top on the highs short term, probably going to see some profit taking in the overnight session, meaning that we're going to start pulling back a little bit. I would love to see that pullback back to 67.05 in the overnight session so that we can catch a rally back up to attempt those highs. It's going to be an inside high, right? I'm looking for a bounce off of there to reattempt that inside swing back into that level of resistance once again for some profit taking. So not a huge move by any means, but looking for about a 50-60 cent move off of that 67.05 if they want to support it. Over on the S&P, we are finding a lot of chop and slop. Today was, man, what word can you use for today that isn't too harsh? Brutal, I think would be the best way to put it. The index markets were very slow, choppy, sloppy, pretty much the same as all the other markets, but we did have a very fast snap down at 10 o'clock and a very quick rally right back up again. And I'm sure a lot of buyers are buying underneath these lows, scaling in underneath the lows, especially with this big brick support right there. Probably a lot of buying there as well. But for the most part, we're not really accomplishing a whole lot. We're just kind of trying to deviate outside of it and then failing and trying to deviate outside of the highs, and that fails as well. And we're just kind of rounding off that same level of support that we've been in for a good day or so now. I'm still looking for resistance a little bit further up on the S&P at 22.75 up to 25 3/4, up to 26, we'll say. That's definitely the zone of interest that I'm looking for inside of here. We're not quite there yet. We need a little bit more bullishness, potentially going for a bull engulfing candle if this bullishness keeps up. But for the most part, we're still in a range. And if it does go bull engulfing, I can't really say that I believe the buy move. I would assume that it's probably getting a little overextended, might need to pull back on itself, which works out great because if it goes bull engulfing into resistance, then we have everything lining up pretty nicely. But for the most part, the S&P is still pretty range bound. I'm still treating it like a range with an obvious bull side edge until we hit the resistance up here at around, 22 to 26. Drop that down there. Take a look at the bonds. The bonds didn't move a whole lot today. We had not a whole lot of movement, but they are pulling back a little bit after that twin reversal on the highs and a retest as resistance. Looking for them to pull back for the inside swing. That's going to be at 145.09375. These good old, these round numbers that we have on the 30 seconds. What would that be? 03. Okay, so 145.03 is that level of support. Looking for a short-term bounce off of that. If they do want to make it a little bit lower, of course, we do have the 3 push wedge bottom, horizontal support and major support all coming in the same place. A little bit deviating from it now, but it's still okay if it gets down there in the next few candles for a level of support down at around 144.16s. Well, maybe a little bit higher. 144.20s would look a little bit nicer for that bounce up. But in the meantime, looking for that inside swing to hold at 145.03. See if they can get a little bounce off of that. Probably in the overnight session at this rate. They might hit it yet today. But with as slow as this thing has been, it's hard to say. Gonna be a tough one. Now, taking a look at the news for tomorrow. Let me pull up the news calendar here. The news calendar, you know, for today, we had pretty light news. Obviously, today's Wednesday, so we had inventories. But if we look at tomorrow, we can see that it is not much better. There's still some pretty light news. There's not a whole lot going on for the U.S. session. But tomorrow, in the morning, out of the UK at least, at 4:30, we have the retail sales for March forecasted at negative 0.5%. Then we go into the U.S. session, 8:30, we have the Philly Fed Manufacturing Indexes for April, forecasted at 20.8. Previous was 22.3. Out of Canada at 8:30, same time, we have the ADP non-farm employment change. So Canada has some big news tomorrow. We do not in the U.S. And that's it. Not really any other big news announcements, nothing to really worry about going into tomorrow's trading. So pretty light on the calendar. And if we look at only the big news announcements, right, get rid of the small and the medium news announcements, there is a pretty sparse calendar for tomorrow. And that's all we're left with. So we've only got 3 announcements, one for the UK, one for the US, and one for Canada. That's really about it. So pretty sparse over there, but that's not to say it won't get some movement. You know, the Philly Fed Manufacturing can give us some pretty good moves if the market wants to, you know, cooperate. And since that's the only news that we have for tomorrow, it might not look that bad. We'll have to wait and see. So let's take a look at some of our favorites over here on the stock side of things. We had plenty of movement today on the stocks, but again, a lot of them were not the best thing in the world. One that definitely sparked a lot of interest was CANN, that's General Cannabis Corp. We have a very strong rally to the upside, and whenever I see a perpetual move like this, where it's gap up, run, gap up, run, gap up, run, gap up, run, the first pullback against that is probably going to get bought, and that's exactly what we had here. Now, unfortunately, they gapped up and ran and never really filled the gap, so if you were looking to buy off of that gap fill, probably had a little bit of a hard day today, but they are up about 70 or 80 cents from that point, in a beautiful example of just a continuation rally to the upside. This one day of bullishness might be all they have. This could end up collapsing all the way back down to the lows, but with some pretty positive and bullish talks on the cannabis industry as a whole from President Trump, it does appear like the pot stocks are definitely catching a nice lift. Something to keep an eye on. You know, CANN is a little bit more on the expensive side. There are some that are a lot more expensive. I even have a personal pot stocks a watch list here of all the different ones, and we can see that for the most part, if we look at the net change, the ones that are down aren't down very much, and the ones that are up quite a bit. So a nice little rally to the upside here on the pot stock side of things. Of course, if we jump over to our favorite Twitter, we've been talking about for a while. Twitter, for the most part, we had that big bull rally to the upside. Today, not doing much of anything, just completely dead and stalled out. That's not a bad thing, okay? One of the big things that we run into after a big move like that is the market stalls for a little while. It has to calm itself down and try to kind of recalibrate. What does it want to do? We saw that over here as well. Big bear drop to the downside, stalled out for 3 or 4 days after before another big drop down. We could be looking at the same thing on the inverse. Big run to the upside, we could stall out for a week or so, but then the inevitable upside potential is definitely still lingering. So still looking for the upside swing. We might be able to catch a nice inside pullback here back towards around that $30 mark for continuation to the upside, but still looking for 35 if they can get that rallying going higher. So that's all looking good there. TSLA, Tesla, is trying to get a bull lift to the upside. This was after we were looking at that pennant formation, trying to fake break the lows. It did end up closing bearish. That is not the bull close that we wanted to see on Tesla, and they had some pretty weak follow through so far. There's still some time in the day to get this to close nice and strong, but for the most part, this looks pretty crappy to me. This is not the bull candle that I would want to see. I want to see a bull candle that looks like this, right? A nice strong bull bar. A little bit of wick on the high is fine. That's no biggie. But I want to see a good strong bull bar, and we're just not getting it. Right now, we're stuck with a bunch of wick on the highs that can't even get back above that 295 level. It's definitely a little bit of a problem. So Tesla's a little bit in limbo right now. Either, you know, we're just kind of pausing before another strong rally to the upside, or we're gearing up for a potential fall, like we were talking about, a spike ledge fall. that is starting to look like that might be the case. It all depends on how they end up closing this candle and maybe even tomorrow's, because right now this definitely doesn't look good enough. Over on MasterCard, getting more continuation to the upside, still looking really, really good on MasterCard. Upside objective, again, you know, we were looking for around this 180 area. We're pretty close. I mean, some traders might just say close enough. Today's high on MasterCard was at 179.80. It's only 20 cents away. Considering the fact that, you know, we were looking at it at 173, it's up, you know, about $6 from there. I don't think anybody's going to be too upset by a 20-cent difference. But the primary objective, of course, is breaking through the highs to see if they can get to 184 or 185 for a little more continuation. Might be running out of steam here, but it so far has been a very nice lift. Not too bad at all there. Let's switch this back to my morning stock list before I forget here. Morning watch list. There we go. Perfect. Some of the other ones that we have been talking about, Boeing and, well, Boeing mainly just due to the accidents that have been going on, doesn't seem to have affected them too badly. You know, the investigations that really was a concern for Boeing is that, was it a mechanical malfunction? Was it Boeing's fault that it happened, right? Those are the kinds of questions that a lot of people have to ask themselves, and judging by today's price action, doesn't really look like Boeing is at fault here. But if we look at LUV, Southwest Airlines, Southwest Airlines yesterday got slapped on the news, and now today they're rallying all the way back up. So apparently that didn't really have that much of a deal when it came to Southwest Airlines. Buyers obviously like that little dip there, and regardless of what happened, as unfortunate as it was, for whatever reason, Southwest Airlines is catching a very nice rally to the upside, and there's bottom end divergence showing that the buyers are trying to put in a low. So this looks like it was nothing more than a technical trap at the bottom on fundamental news, and then a rally right back up again. So there might be some persistent bulls here looking for a rally back up. Likely objective is back to the high after that gap down at around 58. Would love to see them fill the gap at 61, but man, I have a really hard time buying Southwest Airlines after something like that. Maybe that's just me, I don't know, but they are seeing a very nice rally to the upside. Facebook, mostly range bound, not really a whole lot going on there, so I'm not really too concerned about Facebook. Looking through some of the other ones, you know, we were looking at MasterCard. Visa is also catching a nice lift to the upside. And if we look at, you know, the difference between Visa and MasterCard, one thing that I really like doing is looking at the pairs trader option here. And we can compare the two. So if we look at Visa compared to MasterCard, we can see what their correlation is. And the correlation does tend to be fairly high, especially more recently. We're looking at a correlation of about 50% or more with some deviations outside of that. So that does definitely help. You know, we were talking about MasterCard wanting to lift higher, and Visa is also lifting higher. It's all showing, it's all showing some pretty good lift to the upside potential here. It's just a matter of really how far they want to go. Now, in terms of the agricultural markets, I didn't mean the slash there. DBA, overall, you know, power shares. This is the power shares for the agricultural sector, the ETF there. Mostly bullish, but it's kind of interesting because the DBA power shares are bullish, but if we look at something like soybeans, soybeans is getting beat up a little bit. They have a bear turn to the downside. Wheat has been doing fairly well today, but most of the other agricultural markets have been getting slapped a little bit. So it's kind of strange to see that kind of back and forth when the other markets really aren't showing it. If we look at the futures outlook here, we can see that soybeans has been mostly bearish. Soybean oil is slightly range bound to slightly up, not a whole lot going on there. Soybean meal getting pounded to the downside. Wheat did have a nice rally, but a heavy pullback before seeing continuation to the upside. So it's mostly neutral to bearish for the most part across the board. So it's surprising to see that when we look over on DBA, that it's a bullish day. That doesn't really make a whole lot of sense. So the fact that DBA is catching a little bit of a lift after a gap higher almost makes me think that sellers might utilize this area of interest to try to drive the market down on sort of a false pop, right? Just doesn't look like it's doesn't look like it makes that much sense, you know. That's not really what I want to see. So kind of interesting to see that. Can you do LE? Just got on? Yeah, definitely. Let me take a look at LE for you. Good old cattle. Cattle, I think the big thing that's really kind of slapping cattle around is just the fact that they had that giant gap down. I think they're trying to figure out what in the world they're supposed to do now that they had that humongous gap lower. And really in the intraday, we can kind of see that as well. You know, looking at Where did my cattle chart go? Here it is. Looking at cattle for today, they're not really doing a whole lot on the intraday. We had that gap up. They tried running higher. That failed. Now they're trying to run a little bit lower, but it's been very choppy on cattle, at least live cattle. Feeder cattle had a little bit better movement. Generally they are both very intertwined with one another. There's a high level of correlation between feeder and live cattle. But feeder cattle catching a nice little pop higher here. Live cattle not seeing that. That could be a correlative type of play where, feeder cattle is lifting higher and live cattle might end up following along with it. Generally speaking, in terms of correlations, live cattle is the leader, feeder cattle is the follower. That's not always the case, but that could be a little bit of a clue that we might catch a lift up on live cattle on this dip to the downside. On the bigger picture here, really the big thing that stands out to me on live cattle is simply the fact that, if we jump over to the bigger time frame again, here, there we go. We had that giant gap down, and the one thing that I love seeing with these big gaps down is an attempted fill of that gap. Now, one big thing that does happen with these big gaps is they'll go halfway, right? What's called a half gap. It's a very common gapping scenario where they close here and they open down here and they end up going half gap instead. So really the areas that I'm looking at in terms of this breakout to the upside would be a full gap, obviously at -1, but also a 0.5 half gap on the way up. So those are the areas that I would really like to see catching a little bit of a lift, seeing if they can get, I wanted the 50%, not the -50. 50%, there we go. I would love to see a half gap fill at around 108.075 as a level of resistance. Now, at this rate, it might take a week and a half before it actually gets there, but that is going to be a big level to keep an eye on over the next couple days. Obviously, the full gap fill, I'm sure a lot of traders would love, but, looking at the daily chart, it's just not giving us a whole lot to work with. They tried getting, after that gap down, they tried getting a little bit of bullishness. That failed and pushed down to a new low, but that new low, that's about as weak as they come, right? And now we're trying to rally back to the highs, but the buyers are nowhere to be found here either. I have to assume that sellers are building in positions above these highs going into the half gap, full gap, etc., assuming that it is going to go back down to retest these lows once again at some point. That retest of the lows could happen tomorrow, could happen in a month and a half from now, but that is what it looks like right now. Another thing to possibly consider is stacking up these fibs together. Right? If we look at this overall attempted down move, a lot of times the market will want to reverse this area equidistant, right? Me and my equidistant breakouts, I love them. So looking for an equidistant breakout from the high to low and basically just reversing it, right? And saying, okay, well, if this is going to fail, then we're looking for a resistance level on the equal amount that it tried to push down. And notice where that kind of lands? All around that half gap area. It's creating this zone of interest. So, if you wanted a zone, that's the zone right there. Now, as it stands here, I'm pretty much looking to trade this like a range. Buy low, sell high, stay out of the middle, because that's really all it's giving you. But yeah, no problem. Looking at some of the other ones that have popped up today. Not Pandora. Where is... there we go. CMG, Chipotle. Chipotle Mexican Grill. Catching a nice lift to the upside, but finding a lot of failure up here as well. Having a hard time getting any closes above these tops, and that does make a lot of people nervous. When you see a breakout, you want to see it follow through, and even though we do have a gap and run, gap and run, gap and run, it's getting a little bit weak up here. Probably seeing some profit taking. For the most part, Chipotle's been having a little bit of a hard time. It's been bearish since, mid-2017. We're trying to get a little bit of a turn back to the upside, and it's getting pinched inside of the moving averages. A lot of times when you get that pinch inside there, you will end up seeing a breakout. It's just a matter of, is this breakout real, or are they going to, hit the landing rough and start collapsing back down again? I think that's what a lot of people are waiting for. This is where it's, a lot of people are starting to hedge their bets, right? Put the bets on the table and see which way it wants to go. CMG's in a little bit of limbo here. That's really about all that jumped out today. For the most part, I think the big thing that I'm waiting for now, we were talking yesterday on corn, wanting to see that that area at 81.25. If we go back to yesterday on corn, we were talking about wanting to see a breach above those highs at around 81.25. Ended up holding it really nicely for a little bit of time. held it nicely, tried ticking down, just couldn't get anywhere and started rallying back up. But that didn't stop them from coming all the way back down again and using that same area as a little bit of congestion before popping back down. So it took a little while, but if you were watching that area and potentially maybe even building in above these highs, assuming that the breakout's going to be fake, it did have a nice turn off of that, but 81 1/4 arguably did not hold very well yesterday. Not as well as I wanted to see it. I wanted to see 81 1/4 hit and then turn down to a new low. Didn't quite make it down there. What was the other one that we were talking about yesterday? It was corn and one other one. Corn and one other one. I don't remember what the other one was. Yeah, it's not coming to me. But, you know, aside from that, it was a relatively calm day today. There wasn't a whole lot going on. The one big thing that did stand out of interest, and I took a screenshot of it because the market moved away from it, but we had a move on soybean meal. And soybean meal, oh man, it had some serious order size coming in. Let me grab that screenshot really quick here. Right there. So soybean meal was falling for the better part of the day. Lots of bearishness coming in and driving lower, and we started pushing down into these lows at 375.7. And then this happened, right? So bid ask, pretty normal to see around 10, 15, 20. On the buy side, while it's falling, not a surprise to see a little bit of heavier movement because people are taking profit. But this, that stands out a little bit. It's not like it's a small little bitty order. It's, you know, you're talking 10, 15, 20, 50s, 80s, 646. So 375 is going to be a big area of interest when we're looking at soybean meal if it can get back down to the lows. You know, we're a little too far away to be able to see what that size is. It's down at 375. Need to fall a little bit more before we can actually see it on the active trader, but that is an area that I am definitely keeping an eye on. You can see I've got my line drawn right there at 375. See if that trader's still there. You know, it'll be really interesting to see what happens if they start falling back down into that. But I mean, aside from that, there's not a whole lot else that I'm really looking for right now. You know, looking at the larger time frames here that we have, bonds is pushing down into that level of support. The euro's just kind of chopping around, not really doing a whole lot. Gold's pulling back on itself, looking for support at 48.1. I mean, all the areas that we've already talked about, but we got a little bit of waiting to do. So give everyone a little bit of time to type in any markets that you want me to cover. We already had the one on live cattle. Love live cattle lately, especially. It's been moving. I like ranges. I tend to prefer trading in ranges, and live cattle has been nothing but a range for the past week. So definitely a pretty big fan of cattle lately, but not seeing much else, though. Speaking of live cattle, catching a big bull bar to the upside, trying to catch a little more continuation to the upside. That might be them trying to follow along with feeder cattle, which is almost up to a new high a day. So feeder cattle putting in a potential low of the day, and live cattle following along. Live cattle still at the lows. Might see them follow along and try to lift higher. So it could be a potential longer-term hold on live cattle for a run back to highs. Soybeans, I really wanted to see soybeans lift up to 1044. That's where I'm looking to potentially sell on soybeans at 1044, but we're running out of time. You know, the agricultural markets start closing at 14:15, and well, we've only got about, you know, a little under an hour for it to actually happen, and if it does happen, it might not have enough time to actually get anything off of it anyway. So I would love to see a lift on soybeans up to 1044, maybe up to 45.5 even. But they're running out of time to do it. So I'd prefer to see that sooner than later. Aside from that, not much else. Not seeing anybody typing in any other markets that you want me to analyze. So that's going to do it. You know, as always, I mean, the euro, man, picture perfect on the euro. I wish I didn't have to sleep because 5 in the morning is a little bit rough to kind of catch that one. But, oh, man, what a bounce off of that support at 24.01. Bonds are pushing down into support right now, looking for a pullback on gold to support. Looking for crude oil to hold this level of resistance on the highs. They've got another 20 minutes or so. It looks like they're trying to fight back just a little bit. Would like to see a pullback to 67.05 as support instead for crude oil. S&P still just kind of waiting. So that's going to do it for today. Like we always say, you know, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you should be all right. As always, along with that, if I can say as always any more times, I promise I'll try not to. Click the subscribe button underneath the video so you make sure that you don't miss any of these live streams. We do them Monday through Thursday at 1 p.m. Eastern. You can also click the little bell icon over to the right of that so that you'll be notified every time we go live. But, you know, everything else going on, just kind of waiting. We're sitting on hands a lot right now, waiting for price to go into a favorable position for us to jump in. So like I said, make a plan, trade the plan, follow those rules. You should do all right. If I missed any of your questions, feel free to send those in. Otherwise, we will see you all tomorrow, all right? Have a good one, and we'll talk to you all later.